Based on the historical data and forecast, Bitcoin has shown considerable volatility, bouncing between support and resistance levels. The RSI readings fluctuate between oversold and overbought zones, indicating potential opportunities for strategic entry and exit points. The Bollinger Bands have widened recently, suggesting increased market uncertainty and potential for larger price swings. Considering these factors, I recommend a combined strategy incorporating RSI and Bollinger Bands. First, we will implement a strategy based on RSI. When the RSI falls below 34.0, which is an oversold condition, we will enter a long position at $76,300. The stop loss will be set just below the support level at $75,000 to protect against a potential downward trend. The initial target price will be $82,600, aiming to capture a quick profit. Next, we will implement a strategy based on the Bollinger Bands. When the price touches the bottom of the Bollinger Bands, we will enter a long position at $77,100. The stop loss will be set just below the bottom of the Bollinger Bands at $76,500. The target price will be the center of the Bollinger Bands at $83,200. Finally, we will implement a strategy based on the forecast data. When the forecast price falls below $80,600, we will enter a long position at $80,600. The stop loss will be set just below the forecast price at $79,500. The target price will be $83,000. Combining these three strategies, the most efficient portfolio will be to enter a long position at $76,300, with a stop loss at $75,000 and a target price of $82,600. Based on the historical data and forecast, Ethereum shows a downtrend with significant volatility. The RSI consistently remains below 30, indicating oversold conditions, but failing to trigger a strong reversal. The forecast predicts a continued decline, reaching $1,480. Considering the support level at $1,470 and the current RSI levels, I recommend a contrarian strategy. We will enter a short position at $1,560. The stop loss should be set slightly above the recent high at $1,580 to avoid being trapped in a potential short-term bounce. The initial target price is set at the support level of $1,470, offering a substantial profit margin. To refine this strategy, we will incorporate the Bollinger Bands. Since the price is consistently near the lower band, it suggests a potential for further downside. If the price touches the lower band of $1,480, we will adjust the target price to $1,480. This combined approach of RSI and Bollinger Bands offers a robust risk-reward profile. The portfolio will be 60% short Ethereum at $1,560 with a stop loss at $1,580 and a target price of $1,470, and 40% in cash to capitalize on potential rebounds or to add to the short position if the price continues to decline. Based on the historical data and forecast, XRP has been exhibiting a downtrend, with prices fluctuating around the $2 mark. The RSI consistently remains below 50, frequently dipping into oversold territory below 30, suggesting a bearish sentiment. Considering the forecast for the next week, the price is expected to hover around $1.98 to $2.01, reinforcing the downtrend. To capitalize on this, I propose a short selling strategy. We'll enter a short position when the price touches the support level of $2.02. A stop loss will be set at $2.05 to protect against unexpected upward movements. Our initial target price will be $1.89, aiming for a quick profit from the anticipated downward trend. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band of $1.76, it indicates a strong oversold condition, confirming our short position. We will adjust the target price to $1.76 if the price reaches this level. This combined strategy leverages both RSI and Bollinger Bands to maximize profit potential while minimizing risk. The portfolio will be 70% short selling based on RSI and 30% short selling based on Bollinger Bands. This blended approach offers a robust and potentially high-return investment opportunity in the current XRP market conditions. Based on the historical data and forecast, BNB shows a mixed trend with periods of volatility. The RSI consistently fluctuates, staying mostly within the 34 to 49 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased market volatility. The support price remains stable at $552, while the resistance has been around $590. Considering these factors, I recommend a moderately bullish strategy with a focus on capitalizing on potential upward movements while managing risk. My strategy involves a long position entry at $575, triggered by the forecast price on April 15, 2025. The stop loss will be set at $552, coinciding with the established support level, to protect against significant downside risk. The initial target price is $588, aligning with the forecast price on April 17, 2025, representing a reasonable profit target given the current market conditions. If the price reaches $588, I will move the stop loss to the entry price of $575 to secure profits and protect against potential reversals. A secondary target price of $590 will be considered if the price continues to show bullish momentum beyond the initial target. This approach combines technical indicators with support and resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Solana shows a volatile trend with support at $117 and resistance at $124. The RSI indicates oversold conditions recently, fluctuating between 32.6 and 47.7. The Bollinger Bands suggest that the price is currently near the lower band, indicating a potential bounce. Considering these factors, I recommend a long position. The entry price should be $112, coinciding with the recent forecast price and the lower Bollinger Band. A stop loss should be placed at $105, just below the recent support level and the bottom of the Bollinger Bands, to limit potential losses. The initial target price should be $118, aligning with the forecast price and the middle Bollinger Band, offering a quick profit opportunity. To refine the strategy, I'll incorporate RSI signals. If the RSI rises above 50, indicating a strengthening uptrend, we can adjust the target price to $121. Conversely, if the RSI falls below 30, suggesting renewed oversold conditions, we should tighten the stop loss to $107. This dynamic adjustment allows us to capitalize on momentum while mitigating risk. The overall portfolio should allocate 60% of capital to this long position, with the remaining 40% held in cash to capitalize on potential pullbacks or alternative opportunities. This approach balances potential gains with prudent risk management, aligning with a high returns investment strategy. Based on the historical data and forecast, Dogecoin shows a slight downtrend with periods of consolidation. The RSI consistently fluctuates around the 40 mark, indicating indecision. The Bollinger Bands show that the price has been approaching the lower band, suggesting a potential oversold condition. The forecast for the next week predicts a continued downtrend, but with slight upward movements. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. My strategy involves entering long positions when the RSI dips below 30 and the price touches the lower Bollinger Band. The entry price would be $0.149. A stop loss should be placed just below the support level at $0.142, setting it at $0.141. The target price should be the center of the Bollinger Bands, which is around $0.168. This strategy aims to capitalize on short-term rebounds while limiting risk with a conservative stop loss. If the forecast continues to show a downtrend, the price may bounce back to $0.157 before continuing the downtrend. Based on the historical data and forecast, TRON shows a slight upward trend. The price has been fluctuating within a range of $0.23 to $0.243, with support at $0.239 and resistance at $0.246. The RSI is generally between 45 and 58, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands show the price recently approaching the upper band, suggesting potential for a pullback. Considering these factors, I propose a strategy that combines RSI and Bollinger Band signals. My recommended strategy is to initiate a long position when the RSI dips below 30, and the price touches the lower Bollinger Band. Given the forecast, I anticipate an entry price of $0.23. Place a stop-loss order at $0.226, just below the lower Bollinger Band to protect against unexpected downside. Set a target price of $0.246, aligning with the resistance level. This strategy aims to capitalize on potential upward momentum after a temporary dip, while limiting risk with a well-defined stop-loss. I suggest allocating 60% of your capital to this strategy, as it aligns with the prevailing trend and technical indicators. A smaller 20% can be allocated to a RSI-based strategy, entering long when RSI is below 20, with a target of $0.248 and a stop-loss at $0.235. The remaining 20% can be allocated to a simple trend-following strategy, entering long when the price breaks above the resistance of $0.243, with a target of $0.25 and a stop-loss at $0.238. This diversified approach should maximize returns while managing risk effectively. Based on the historical data and forecast, Cardano has shown volatility with a recent dip and slight recovery. The RSI has fluctuated between 33.2 and 44.5, indicating periods of oversold and overbought conditions. The Bollinger Bands have also widened, suggesting increased market uncertainty. Given the current forecast prices ranging from $0.607 to $0.619, and the support price of $0.559, I recommend a cautious long position strategy. We will enter a long position at $0.607, placing a stop-loss order at $0.586 to limit potential losses. The initial target price will be $0.631, aligning with the recent resistance level. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. If the RSI falls below 30, indicating an oversold condition, we will consider entering a long position at $0.599, with a stop-loss at $0.575 and a target price of $0.631. Conversely, if the price touches the lower Bollinger Band, it might signal a potential buying opportunity. If the price reaches the lower Bollinger Band at $0.552, we will enter a long position with a stop-loss at $0.54 and a target price of $0.619. This blended approach combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows a downtrend with significant volatility. The RSI consistently dips below 40, indicating oversold conditions, while the price oscillates within the Bollinger Bands. The forecast suggests a continued sideways movement around $12, but the support level at $10.9 and resistance at $12.8 provide key price boundaries. We will implement a combined strategy leveraging RSI and Bollinger Bands for optimal returns. The strategy will focus on capitalizing on short-term fluctuations within the defined range. The entry point will be triggered when the RSI falls below 30, indicating an oversold condition. For example, on April 11, 2025, the RSI was 30.7, so we will enter a long position at $12.1. The stop-loss will be set just below the support level at $10.6, aiming to limit potential losses. The target price will be set near the upper Bollinger Band, around $12.4, to capture a reasonable profit. We will adjust the position based on the RSI and Bollinger Bands readings. If the RSI rises above 60 or the price touches the upper Bollinger Band, we will exit the position to avoid potential losses. This strategy combines the signals from both indicators to maximize profit while minimizing risk. Based on the historical data and forecast, Avalanche has been exhibiting volatility, fluctuating between a support price of $18.2 and a resistance of $24.7. The RSI has been oscillating around the 40 to 50 range, indicating neither strong overbought nor oversold conditions consistently. However, the recent dip in RSI values, particularly reaching 34.5 on April 10, 2025, suggests a potential oversold scenario. Considering the forecast for April 12, 2025, at $17.9, we can implement a buying strategy. The entry price will be $17.9, with a stop-loss placed just below the support level at $17.5 to mitigate potential losses. The initial target price will be set at the resistance level of $24.7, aiming for a substantial gain. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity. Given the forecast, if the price reaches $17.4 on April 13, 2025, we can consider an additional entry. The stop-loss for this entry would be $17, and the target price would be $18.8. Furthermore, if the RSI falls below 20, indicating a strong oversold condition, we can enter a long position at $16, setting a stop-loss at $15.5 and a target price of $19. This tiered approach, combining RSI, Bollinger Bands, and support/resistance levels, offers a robust strategy for maximizing returns while managing risk. Based on the historical data and forecast, Render shows a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuating around the 40 to 55 range suggests the asset is neither significantly overbought nor oversold. However, the forecast for the next week indicates a potential upward trend, with prices predicted to rise from $3.33 to $3.77. Considering the support price of $3.15 and the resistance price of $4.04, I recommend a long position strategy. We will enter a long position at $3.33, placing a stop-loss order at $3.15, just below the established support level. Our initial target price will be $3.72, aligning with the recent high and the forecast price. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading within the bands for most of the recent period. If the price touches the bottom of the Bollinger Bands at $2.71, it signals an oversold condition, which could be a potential entry point for a long position. However, given the upward forecast, we will stick to the initial strategy. The target price can be adjusted to $3.77 if the upward momentum continues as predicted. This combined approach, blending RSI, Bollinger Bands, and forecast data, offers a balanced strategy to capitalize on the anticipated upward trend while mitigating risk with appropriate stop-loss levels. Based on the historical data and forecast, Raydium shows a mixed trend with periods of both upward and downward movement. The support price consistently holds at $1.7, while the resistance fluctuates around $1.93. The RSI values have been oscillating between 35 and 46, indicating neither strong overbought nor oversold conditions recently. The Bollinger Bands show periods of contraction and expansion, suggesting volatility. Considering the forecast for the next week, which predicts a downtrend towards $1.51, a short position strategy is recommended. We will enter a short position at $1.77 with a stop-loss placed just above the recent high of $1.84, at $1.85. The initial target price will be the forecast low of $1.51. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we will consider covering the short position and potentially initiating a long position. If the price touches the lower band of the Bollinger Bands, it could signal a potential rebound, and we will adjust the stop-loss accordingly. However, given the forecast and the current RSI levels, the primary focus remains on the short position. Therefore, if the price reaches $1.51, we will take profit. If the price retraces to $1.65, we will place a stop-loss at $1.66 and set a new target price at $1.48. This dynamic approach allows for adapting to changing market conditions while capitalizing on the anticipated downward trend. Based on the historical data and forecast, Solana shows a volatile trend with support at $117 and resistance at $124. The RSI indicates oversold conditions recently, fluctuating between 32.6 and 47.7. The Bollinger Bands suggest that the price is currently near the lower band, indicating a potential bounce. Considering these factors, I recommend a long position. The entry price should be $112, coinciding with the recent forecast price and the lower Bollinger Band. A stop loss should be placed at $105, just below the recent support level and the bottom of the Bollinger Bands, to limit potential losses. The initial target price should be $118, aligning with the forecast price and the middle Bollinger Band, offering a quick profit opportunity. To refine the strategy, I'll incorporate RSI signals. If the RSI rises above 50, indicating a strengthening uptrend, we can adjust the target price to $121. Conversely, if the RSI falls below 30, suggesting renewed oversold conditions, we should tighten the stop loss to $107. This dynamic adjustment allows us to capitalize on momentum while mitigating risk. The overall portfolio should allocate 60% of capital to this long position, with the remaining 40% held in cash to capitalize on potential pullbacks or alternative opportunities. This approach balances potential gains with prudent risk management, aligning with a high returns investment strategy. Based on the historical data and forecast, Bitcoin Cash shows significant volatility with periods of both upward and downward trends. The RSI consistently dips below 40, indicating a generally oversold condition. The forecast for the next week suggests a slight upward trend, with prices fluctuating between $293 and $309. Considering this, I propose a strategy focused on capitalizing on the oversold conditions and the anticipated upward movement. I recommend entering a long position at $293, coinciding with the support level. To mitigate risk, set a stop loss at $265, just below the recent low of the Bollinger Bands. For the target price, aim for $322, the resistance level, which represents a potential $29 profit per Bitcoin Cash. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, which has been frequent recently, it signals a potential buying opportunity. If the price breaks above the upper band, it suggests a possible exit point. Combining this with the RSI, a long position at $295 is recommended, with a stop loss at $269 and a target price of $312. This blended approach leverages both momentum and volatility indicators for enhanced profitability and risk management. The RSI is below 40, indicating a good opportunity to enter a long position. Based on the historical data and forecast, Dogwifhat demonstrates a downtrend with periods of volatility. The RSI consistently fluctuates below 50, indicating prevailing bearish sentiment. The forecast for the next week predicts a continuation of this downward trend, with prices hovering around $0.35 to $0.36. Considering these factors, I recommend a short selling strategy. Entry price will be $0.356, with a stop loss placed above the upper Bollinger Band at $0.358 to limit potential losses. The target price is set at $0.319, aligning with the recent support level and providing a reasonable profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, which could offer a temporary bounce. However, given the overall downtrend, we'll focus on short positions. The entry price will be $0.351 when the price approaches the lower Bollinger Band. The stop loss will be $0.353, just above the band, and the target price will be $0.335, near the support level. This combined approach, utilizing both RSI and Bollinger Bands, aims to capitalize on short-term price fluctuations within the broader bearish trend, maximizing potential returns while mitigating risk. Based on the historical data and forecast, Bittensor shows a volatile trend with periods of both upward and downward movement. The RSI consistently indicates oversold conditions, generally below 40, suggesting potential buying opportunities. The Bollinger Bands show that the price is currently near the bottom band, indicating a possible bounce. Given the recent price surge to $250 on April 11, 2025, and the forecast predicting a continuation of the upward trend, I recommend a long position. Enter a long position at $218, with a stop loss placed at $211, right at the support level. The initial target price should be $234, aligning with the forecast for April 16, 2025. To maximize returns, we will implement a dynamic target price strategy. If the price reaches $234, move the stop loss to the entry price of $218, securing the initial profit. If the price continues to rise, adjust the target price to $240, aligning with the forecast for April 18, 2025. This strategy leverages the oversold RSI, the Bollinger Bands indicating a potential bounce, and the upward forecast, while dynamically managing risk and maximizing potential profits. This approach aims to capitalize on the anticipated upward momentum while protecting against adverse price movements. Based on the historical data and forecast, Curve DAO exhibits a generally upward trend, although with significant volatility. The RSI consistently fluctuates, but recent values have climbed above 50, suggesting increasing buying momentum. The Bollinger Bands have been widening, indicating increased price volatility. Considering the support price of $0.51 and the resistance price of $0.788, the price is likely to remain within this range. Given the forecast for the next week, with prices trending upwards, I recommend a long position. We will initiate a long position at $0.546. To mitigate risk, set a stop-loss order at $0.51, just below the support level. The initial target price will be $0.638, aligning with the forecast for April 16, 2025. To maximize potential returns, we will implement a dynamic target price strategy. If the price reaches $0.638, we will move the stop loss to the entry price of $0.546, securing a risk-free profit. Subsequently, we will reevaluate the market conditions and adjust the target price accordingly, aiming for the resistance level of $0.788. The RSI indicates that the asset is not yet overbought, providing room for further appreciation. Combining the upward trend, positive forecast, and RSI readings, this strategy offers a high probability of success with well-defined risk management parameters. Based on the historical data and forecast, Pudgy Penguin shows a downtrend. The price has been consistently below the Bollinger Band center and the forecast predicts further decline. The RSI values have been fluctuating, but generally remain below 50, indicating prevailing bearish sentiment. The support level at $0.00468 has been tested multiple times, suggesting it might hold. Considering these factors, I propose a short selling strategy targeting a potential bounce off the support level. My recommended strategy is to initiate a short position at $0.00475. The stop loss should be set slightly above the recent high at $0.00523 to protect against a potential false breakout. The initial target price is the support level at $0.00468. If the price breaks through the support, a second target can be set at $0.00404. This strategy combines technical indicators like RSI and Bollinger Bands with support and resistance levels to maximize potential returns while managing risk. The portfolio will be 60% short selling, 20% RSI strategy, and 20% Bollinger Band strategy. Based on the historical data and forecast, BONK shows a sideways trend with fluctuations around the support price of $0.0000109. The RSI fluctuates between 36.5 and 54.3, indicating periods of oversold and overbought conditions. The Bollinger Bands have been relatively stable, with the price generally trading within the bands. Considering the forecast for the next week, the price is expected to remain around $0.0000108 to $0.0000120, suggesting continued sideways movement. Therefore, I recommend a range-bound trading strategy focusing on short-term price swings. My strategy involves a combination of RSI and Bollinger Band signals. We will enter a long position when the RSI falls below 40 and the price touches the support level of $0.0000109, setting an entry price at $0.0000109. The stop loss will be placed just below the support at $0.0000108 to limit potential losses. The target price will be set at the middle of the Bollinger Bands, around $0.0000120. Conversely, we will enter a short position when the RSI exceeds 60 and the price touches the resistance level of $0.0000140, setting an entry price at $0.0000140. The stop loss will be placed just above the resistance at $0.0000142 and the target price will be set at the middle of the Bollinger Bands, around $0.0000120. This approach aims to capitalize on short-term fluctuations within the established range, balancing risk and reward. Based on the historical data and forecast, JasmyCoin shows a recent downtrend with significant volatility. The RSI consistently hovers below 30, indicating an oversold condition, while the Bollinger Bands demonstrate a narrowing range, suggesting a potential breakout. The forecast predicts a gradual increase, and the support price of $0.0129 provides a floor. Therefore, I recommend a long position entry at $0.00924 plus $5, placing a stop-loss order at $0.00878 plus $5 to manage risk. The initial target price should be the resistance level of $0.0203 plus $5, aiming for a substantial profit. To refine this strategy, we can integrate the RSI and Bollinger Band signals. If the RSI crosses above 30 while the price is near the bottom of the Bollinger Bands, it's a strong buy signal. I suggest a secondary target price of $0.013 plus $5 if the RSI reaches 50, indicating a shift in momentum. This combined approach leverages both the oversold condition and potential breakout, optimizing for high returns while mitigating risk with a well-defined stop-loss.